Alright, ladies and gentlemen, today is the 30th of November, 2 minutes to 5 o'clock local time. This is a fantastic opportunity to capture the long-term stop run of euro-dollar, as I mentioned in the video before. Similar to a cable, which I've just shown a few minutes ago, you see, look, the smart money pushes down the price of euro-dollar, the world's biggest financial market, below the dumb money long traders. You understand? These people bought at those price levels, such as 1.1972, above that, and so on. Here on the left side of the y-axis, you see the long-term stops, the pink lines, and the short-term stops of these dumb money longies. Yeah. So the smart money goes down, touching those prices, taking out these people, forcing them to take losses on their long positions, right? So what happens now in response is those longies will reduce because they get kicked out of the market or they close at a loss. Now you see an actual stop run with the market structure, okay? This is what drives the price. The price itself tells you close to nothing. You need to understand where the positions and orders are of the market participants. Then you understand why the price moves like that. And then you have a leading edge regarding these scenarios. So yeah, this is beautiful. Let me just capture some minutes also of euro dollar. And actually, let me also try to, can I do this? Can I change the area? Yeah, I think I can. Let me do that. Great, yeah. So let me just, boom, focus on that so you can see that better. Now we programmed it in a way that once those stop acclamations get touched, they first turn yellow and then they disappear once they're completely cleaned out of the market, as you have seen several times before. And you see those pullbacks, they are there because around here we have some short positions of the dumb money, the red bars on the right side of the y-axis. So that's why they're pricing in, as I call it, those positions by doing like little fake moves. Otherwise, you know, those shorties could take profit. That's not something they like. Smart money wants to make everybody lose, whether the dumb money is sold or bought. No matter what strategies they use, no matter what they're trying to do on the market. But you know, when you have a formation like this, like here, this green nest is actual real resistance, you see, because that's where the smart money likes to respect those prices in order to make to prevent those long traders and their positions here to get into profit and to close their positions in a significant profit. They may go in there for a short moment, yeah, to take out, for example, the stop of shorties and so on, but they will really try to be as quick as possible. Look at that. So there we go. So as a result, did you see this green bars disappearing? So as a result of those stop runs, those longies are now kicked out of the market. They were forced to take their losses. Some of them closed by choice. Others were closed by getting their stops hunted. I love it, you know, when I capture those live moves and I put them on the channel so people can study that stuff. And here I don't even need to do a time lapse because it's all live. You see, so those pullbacks, they're respecting the upper green nest there. So whenever the price makes a pullback to there, this can be a scalp, for example, short down away from the longies. And they still have some unfinished business there, as you can see, short-term stops, medium-term stops, long-term stops all together. They love to take those kind of targets. And that, by the way, also explains why a simple strategy such as trading towards obvious levels, in this case 1.2, is not a good idea. And I've called this even level phenomena, which refers to the fact that before the smart money may take out those kind of round targets, they first make sure that the dumb money is cleaned out who try to trade towards that. Now, once they have finished their job, once they have taken the low there and cleaned out, and once the longies are out, they still have the chance to take the 120 if they want to take it. You understand? But there's no reason why the smart money, having full price control over those markets, why they should just push the price up and let those longies win. So they make sure that they clean them out first, and that's what creates lots of trade opportunities for us as causality traders, because we trade against those accumulations, like here the longies. That's for us a nice short, down to the stops. And that's what makes it so powerful and unique. Yeah, the markets are influenced by that, of course, Aussie, Kiwi, etc. In such a scenario, this is relevant for other markets as well, which is why we show you the screenshots of several markets. And if you are subscribed to the MK Web, you see several markets, several time frames, the auto screenshots, and you can also get the live stream for seeing like the hour charts of some of those main markets live like this here. Our clients have access to both. And if you want to get deeper into the market causality, then I recommend also the video course, because that one explains to you the meter levels. The meter levels are not part of public information. By a decision, I've never shown those on the channels, because that's more exclusive knowledge for people who want to really get into it. So look, here we go. As predicted, your dollar's pushed down 1.1959. I'm just trying to capture a few more minutes of this. There we go. Taking profit on my short. Okay, you get the idea.